Hey, this is Sasha, and thanks for joining me here for another episode on Hungry for Returns, where I answer your stock trading and investing questions. Now, it could be about options, it could be about swing trading. It's just basically my own personal thoughts, opinions from my own personal experience. Now, if you have a trading or investing questions, be sure to reach out on our website at tradersfly.com. You can write in, or you can submit a question by voice, and that way you may even get featured on the show. Now, today's question, what we're going to take a look at is, our question is, why do they say that the market is always right? What does it mean? And this comes in from Riley. Now, I've answered this question in the past, a couple of years back on one of the episodes, but I'll go ahead and just quickly re-answer this question, maybe in a different way, so that way it kind of hits and maybe sticks with you a little bit more. So when we look at why the market is always right, is really the market is just a reflection of what's going on and what's happening. It is what it is, as they say. The price is the price. So when you look at the trend of what's happening with any stock, or if you look at an individual index, like let's say the S&P 500, it's really, you're looking at what's going on and what's happening. And the market is simply a reflection. It's a mirror. So if you're looking at a certain color, well, the color is, if it's red, that's what it is. It's a mirror. It's reflecting. Your eyes are reflecting that pigment. So this is what's going on with the market, is that if the trend is up, then that's what the trend is. And you should more than likely go with that overall trend. Now, the problem happens is that when you get a very active trader and they kind of don't have a strategy in place, because there's kind of two main ways to trade, right? You have the way to trade where you're going with the trend, and let's say the market constantly is just going higher, 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 like we have been here in the past in the S&P 500, and you go with the trend, and that's perfectly fine. On the flip side, though, eventually that trend is going to reverse. Now, you don't know when, you don't know how hard, but eventually that's going to reverse. So the other approach is you have the contrarian view. And the contrarian stakes, the way that they trade is that the faster and harder this market pushes, like let's say right here, we've had a huge acceleration, the more negative they get because they know they're going to get this down move. So again, the market pushes higher, the contrarian over in this area is going to say, hey, we're going to pull back. And they make the majority of their movement from this downside or the opposite side of the trade. Now, you have the contrarians where they do the same thing, like let's say here, the market's been going down, down, down. Well, in this area, they're actually buyers. So when other people are dumping, they're buyers, or when other people are buying, they're sellers. And this goes along the lines of, it's really interesting because you're looking for a change in direction and you're kind of playing this game against yourself in the way of, hey, I know it's going to reverse soon, so let me position for that reversal. You're looking ahead. Whereas other people are kind of going in this trend, and let's say you're in this trend, and it's fine if you're going with the trend and you get into the trend somewhere over here, but just understand that you're kind of cutting your run a little bit smaller, right? So when we look at, is the market's always right? Well, you have to understand how short of a time frame are you trading in. So if you're looking at kind of a day-to-day action, well, let's say, hey, this market is selling off in a big, big way. Well, are you going to get bearish somewhere over here? Like let's say we've already sold off 10, 15%. Are you going to be bearish over here in this area? And you can see in this case, it probably was not the right approach. It's better to say, hey, well, yes, the market was reflecting negative prices and this was the trend here, okay? But it's probably good to position some longer positions here because chances are we'll bounce. And that's what happened. We've bounced quite heavily. And you can see that if you got in it somewhere in this time frame, you're still above those kind of earlier levels. Now, you may not be in such a favorable position, but hopefully you took a little bit off the table, like half, a third, a quarter, when the market continued to run up into those higher prices. So with that being said, remember, the market is simply a reflection of your prices, your movements. But the key question is how do you position yourself? Are you going with the trend and with everybody else? If you do that, understand that you may be kind of late to the party and stocks may reverse. If you're a contrarian, meaning if you're going against the grain and the trend is going up and dumping shares or you're doing something opposite of what the trend is doing, understand that you may endure pain, and then some reward later on. Otherwise, the market is just a reflection. It's just reflecting asset prices and how people are putting in their positions and trades. So for you, the question is are you looking into the future of what's going to happen, or are you more active in going with the trend and like that kind of feel? You know, you can make money in both ways, whether you're just going with the trend or you're a contrarian, but you need to have a plan and strategy in place to make sure that it fits with your risk levels and risk tolerances. Anyways, thank you so much for joining me in this week's video. I hope you found it helpful. If you have a question, be sure to reach out at our website, tradersfly.com, and where you can also submit your question by voice and be featured on the show. Thanks again, and remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.